Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. I'm Sunanda Jayaseelan. If it matters to you, it matters to us, and we cover everything and anything that is of relevance to you. All of this week, we're continuing to put the spotlight on the field of education. What has changed? Why has it changed? And how can you as a student and how can you as an entrepreneur prepare for some of the changes, especially those brought on by the pandemic? Even as we're seeing a lot of schools reopening, we're seeing students heading off for international courses. All of that we will cover on the show today. We're also getting our experts to answer questions on taking student loans. Should you not? What should you keep in mind? All of that on today's panel. Let's dive right in then. And Sunit Gajhbhiye, co-founder, Chief Business Officer, Financepeer. And just very briefly, for the benefit of our viewers, to talk about your business model and what it is you do.
Financepeer is a platform which focuses on free financing for education. When I say that, essentially the vision that Financepeer has today, so I have a daughter. Today she is going to school. Tomorrow she'll be doing her college. Similar to that, students just don't stop there. She would have a guitar class, she would have maybe a dance class, a football class, and then going forward, eventually she may also go abroad to maybe do her MS or whatever she wishes to do. But all of this needs money. In education, the good part is that education in India, the quality is now increasing. From the day when I did my schooling, the fees at that time was about 16 rupees is what I remember, and now it's very, very different. So that is the vision that Financepeer has, that every child, every student in our country, they have the dream, they fulfill the dream of whatever they want to learn, whatever they wish to be, and Financepeer is there to ensure that money is not a problem for them.
Sunit, what kind of expenses does a student loan typically cover? What does it not? Anything you can tell us?
What Financepeer, Greatquest and a few other companies, the impact that they're doing today, student loan as a stigma in our country. Traditionally, a loan is where I approach a bank and I pledge maybe either my mortgage or I pledge a certain security. There is a certain interest rate that I have to repay that loan in. Right? So this is a student loan in our country. What companies like Financepeer today are doing is that, and hence we are calling it as fee financing. So when it comes to a preschool or even a school, the parents, there is an existing stigma in our society. Right? All of us as parents, it's not that at times we may face a cash crunch, at times we do need a loan. So loan, yes, is need-based. But when we talk about fee financing, what we are looking at is convenience of payment. So there is a slight difference in a student loan versus fee financing. The first and the biggest difference being a student loan is 100% interest based, which means I have to give back the money plus I have to give back the interest for my daughter. Fee financing, I think there is the biggest difference because it is zero cost. Of course, the question comes, who bears the cost? That definitely we'll touch upon that. But zero cost means if I'm paying, let's say, 1 lakh for the school for my daughter, I now have an option of paying 10,000 for 10 months flat. There's not even a single rupee more that I need to pay. So hence, this as a market itself started evolving 3 or 4 years back when Financepeer worked with its first institution. And that is the difference that we are talking about. So student loan, a student loan deals with a student, let's say a college or a school, going for a need-based financing. It is part of a personal loan where there is certain interest depending on the pedigree of the institution the student is working with, depending on the security that the student pledges. Then there is processing fee. Then there is a large number of documentation and validation. And not just that the process being tedious, but the amount of time to get that loan ranges from anywhere in between 2 weeks and it can go up to 3 months also, depending on the size of the loan. vis-a-vis fee financing of what we are trying to do today is something that it's complete minimal documentation as a process where a student is applying. There is no interest. It's complete transparency that 1 lakh is what your fees are for a year. This is what you're going to pay. Not even a single rupee more is going to go from you. And on top of it, there will be a lot of things more that can be done, which is not in a student loan. For example, ensuring the education, rewards, and new learning courses.
I have to take a quick break on that note. We're back in just a moment. Welcome back with us here on Leaders of Tomorrow. Tonight, we're continuing our week-long special series on education, talking about the changes that we've been seeing as a country and also what is happening when it comes to the field of applying for educational loans. All of that with our experts tonight. Our parents who are, not in, say, socioeconomic class A or B, they're the ones also applying for loans. And are they perhaps, approaching taking loans for education very differently compared to others? Or is it, a very sort of broad brush when we're talking about who's applying for these loans?
So at Financepeer, we have been working with more than 7,000 odd institutions, majority of them not just being in the tier 1 cities like Mumbai, Pune, Bangalore, Hyderabad, Delhi and so on. But there are in fact a chunk of schools, colleges and institutions that we are working with which come from even tier 2 and tier 3. Correct? So the problem in the Indian context for a loan is that every time when a citizen is applying for a loan, there is a credit check. Correct? That loan can be applied even by doctors or anyone. There is a credit check, and then depending on that, there is an interest that they are charged for. The problem is that in tier 2 cities or in tier 3 cities, most of the students, most of the parents, they are new to credit. That's one. Second, their spending propensity is low because they are living in a city itself where the entire consumer spend is low. So their loans, first of all, loans is a concept for them because they never get it approved. Right? They don't have their bankings in check. They don't have their scores in check. These people would not even have a credit card for all you know. They never have credit cards, right? Carrying a debit card itself is a luxury for them. So yes, access to finance for these folks is really important. Yes, it's not that we are doing social work, absolutely not. There are interest charges within institution base, but yes, the effort is going to ensure that the bottom of the pyramid, the need-based segment, is what we are able to target and have more and more access for them to education.
How will the process of applying for and getting a loan, has that also become more difficult since the pandemic?
Of course, there is a need for loans, so that has increased. But one thing that a common man may not understand is what is happening behind the scenes. On the positive part, of course, there are many negatives to what has happened because of COVID, but the entire sector in banking, which includes personal loans, corporate loans, infra loans, yes, maybe they have gone down, but which include education, they have all shot up. So even I think the average ticket size for HDFC has also gone 10x, correct? And that talks a lot about the market per se. So what is happening behind the scenes is that even though, my 1 lakh example, if I'm putting that in the account for a savings account, and earlier I was making 8% or 9%, now I'm making 6%. So that is reduced. But what that has given the banks, and with the repo rates, what RBI has given the banks and other NBFCs and fintechs is a chance to increase their access. Which basically they have given a chance to increase the risk that can be taken to give that money back to the society. So the injection of funds has increased from all the sides, right from RBI to the banking, and yes, it definitely reflects on startups or fintechs like us. So that access, there's more access and more money in the market. And yes, banks and RBI is helping that the people are able to get and realize.
Sunil, thanks so much for your time. Completely out of time on this episode. If you have any feedback for us, do let us know. Our contact details are on your screens as we speak. Thanks for watching. Have a good night.